So even with stocks near record highs, our next guest says there are plenty of names to buy. Peter Andersen's portfolio, Andersen Capital Management, was up 40% last year. He's here now with a couple of ideas to consider. Peter, welcome. What tops your list?
You know, Kelly, the first thing is a lot of people are talking about things being overvalued, and I think we have to just look back at this past year and say, throw out some of the metrics that we traditionally use just because it's been such an unusual year. That's the first thing I have to say. And then the second thing is, even with that, there are still some stocks out there that have not reached their 52-week high. I don't usually shop just because of that, but I know some of our viewers are looking at those kinds of valuations. So let me throw out some two pet names, for instance, Fresh Pet and Trupanion. These are two stocks, two companies that are catered to the animal care industry, and they are, in my opinion, recession-resistant, COVID-resistant, recovery-resistant, every kind of thing you can possibly put in there in terms of resistance. So those are two names that I think should be held for the long term. You also have a company called, we all know this, American Tower. I've talked about this before, but once again, our cell phones are never ending in the demands we put on them, and we will continue to put on great demands, more technology, and that's just fantastic for the bottom line of American Tower. And lastly, the trade desk, excuse me, that is a company that does digital advertising. It has been dinged because it's been kind of thrown in the same category as Snap, when Snap reported its earnings, saying that the whole issue with cookies and tracing user content, things like that. But if you look a little bit more deeply at the trade desk, you'll see that that is not an issue at all for them. They have a totally different audience.
Let me ask a little more about Fresh Pet and Trupanion, two of the pet stocks you just mentioned. I presume you like them more now because they are down over the past 3 months and they represent a bit of a bargain at these prices. But my question really is the play already done in those stocks? The COVID play where people were out getting cats and dogs and bringing companion animals into the home?
Well, first, Tyler, you know, I try to be very disciplined about liking things more based just on the price, because as you know, prices can be all over the place with stocks, and many times you can't actually find any rationale behind why this stock has moved up or down. So I try to stick with metrics that I promise myself I'm going to be using regardless of where the prices move up and down. So an interesting question I get often is, if the price is down, why won't you buy more? And my answer is, well, if there's any new information and it's positive and the price is down, then I would buy more. But if the price is down and there's no new information, then I don't think that I would actually add to it, simply because I can't derive any rationale behind that. But secondly, your question about, has this been played out? You know, I bought these stocks regardless of COVID. That was the first thing. I was delighted, frankly, that when, in a perverted way, when COVID came, because it did enhance the demand for pets. But let me just throw out a stat for you, very simple for everybody to understand. With Trupanion, only 1% of pet owners in this country have pet insurance, compared to, say, in Europe, where you have 15, upwards of 25% of pet owners. So imagine if we go from 1 to what I think is very reasonable, 2%, those revenues will double for a company like Trupanion. So I don't think we're anywhere near the zenith yet of market share for a company like Trupanion.
All right, Peter, thank you. It's always good to see you, sir.
You're
Peter
welcome.
Andersen, we appreciate it. And still ahead, a working lunch.